All right, we live. All right, what's up, ladies and gentlemen? I just want to apologize because I looked at the last video and noticed that the audio wasn't even on. It wasn't even on. So I'm just going to quickly send this and I'm going to make it really quick. So basically, last night we were talking about the $500 to $5,000 challenge. And also we covered how to set yourself up as far as brokers is concerned, because what I'm going to be doing is we're going to be doing some live sessions, and I don't want anyone to be left behind. You know what I mean? Because there's going to be some people that is going to be looking at what's going on the session. They're going to be like, bruh, what in the world is going on? But listen, if you do what I'm telling you to do, then we're going to be able to jump to the next level. So if you're ready, I'm ready, and we get this thing rolling. Okay, so first and foremost, one of the things that I wanted to recap was the $500 to $5,000 challenge. If you go over here to mindonbillions.pro, there's the same website where you can access the Binary FX Bootcamp, which is really simple. It's 45 short videos to help you get going with your trading journey in Forex and also binary options. So look, check this out. For the $500 to $5,000 challenge, we just go over here, over to trading, click on compound calculator. We're going to be able to see this screen right over here. We're going to scroll down, and basically the idea is that we start with a $500 account. All right, we shoot for 5% a session, and we do it for 50 days. This is my 10x formula, that I basically started teaching in 2018. And so we click to calculate $500 at 5% a session for 50 sessions. You can see how that could 10x your bread. All right, more than just 10x your bread. Okay, so net profits is 52.33, and here's the whole breakdown for it. Now that's in a perfect world. We all know trading disclaimers, and anyone who teaches you about trading that doesn't do a disclaimer, they're not legitimate, or they're just like excited, they don't know what they're doing really, and whatever. But listen, trading involves risk, including some or all of your initial investment. Also, past results never guarantees future performance. There's two things that you must know, especially when it comes to the world of trading, because each day is a new battle. Each day is another war, if you will. So anyway, here's the whole breakdown. And then if you get to a point where you're making $273 a day, you get close to making $275 a day. So if we bring out the calculator, we could quickly see that $275 a day every day for a year for 365 days equals $100,375. So essentially, if you're over $275 a day, you're on track for six figures. Now, in the beginning, it's going to start off with small profits, $10, $20, $40, whatever. Then eventually get to a point where you're making three-figure days, right? Which is $100 or better, $100, $200, $500, whatever. And then eventually it'll get to a point where you're making four-figure days, okay, which is $1,000 and better. And that's when it really starts to get very interesting. So if you're making more than $273 a day, $275, a day every day for a year, that you're on track for six figures. If you are, making 10 times that, okay, so $2,700, all right, and $30 every day for a year. All right, you're on track for seven figures, okay? 2,750, okay, times 365 days. All right, there we go. So 1 million, okay, $3,750, okay? So if you're over 275, six figures. If you're over 2,750, seven figures, okay? Now it's not gonna happen overnight. This is something that happens over time. Trading involves risk, okay? It takes calculated risks. It's not gambling. Gambling, everything is up to chance, all right? There's not a lottery scratch off. There's not an overnight success, all right? So you just have to keep that in mind. All right, so, you can, take a look and crunch the numbers for yourself using this, or you can scroll all the way to the bottom over here and click on the compound sheet, which you can access on my Google Sheets. And you can play with the numbers however you want. So if I go in here and I type 500, all right, and I enter it, then there you go. You're going to see the same formula pull up right over here. And you can use these blank spaces to actually do your entries on your trading so you can actually keep track with your own results. Okay, so this is really good. I dropped this gift already a couple of days ago. You can look at it in the Instagram chat. Okay, so let's bring it back over here, and let's talk about really setting yourself up for trading. Okay, in order for you to set yourself up for trading, you must have a broker. Okay, Forex is trading based on points, whereas trading based on time is binary options. Okay, so first thing first, you want to go to you want to go over to swaysetup.com. All right, swaysetup.com. It's going to bring you over to this broker. It's called Sway. It's a U.S. regulated broker owned by a former NFL player. Really good, very fast system. Withdrawals are pretty quick, less than 24 hours. It's really good. So if you go over to swaysetup.com, you're going to be able to set yourself up to register for the Forex Broker. Now, for the binary broker, the binary options broker, which is trading based on time, all right, then that's different. You're just going to go over here to binarysetup.com. All right, look, binarysetup.com, and bam, there you go. So it's going to bring you right to this registration form. And listen, when it comes to registering for these accounts, you don't have to put money right then and there in the spot. Just register and just get your account set up. They're going to ask you for documentation and things like that or whatever. Just do it. It's for compliance purposes. And once you're ready to fund, there's already elements in there which could help you earn a bonus. Okay, so definitely check that out because it's gonna be great. Now that you already know about the compound plan and you're already setting yourself up to be able to trade, now when we do our live sessions, you're going to be able to follow along, and if you want to execute trades alongside me, you absolutely can. It's totally your discretion. Just keep in mind, whenever we're doing these live sessions, that everything is based on market commentary, and everything is basically opinionated, and it could change at any given moment. That's because sometimes the market does these shifts. It does these market shifts. Now, yesterday I was going over charting. And so if you go over here at mineonbillions.pro and you click on the basic chart, which is free, you'll be able to see this chart right over here. And this is just a practice chart for the most part. But long story short, you're going to be able to look at these candles. All right. And you're going to be like, what are these? What is going on over here? All right. Well, I can literally break that down to you 100%. These are really good practice charts to go with, to vibe with. It is going to be better for you if you click on this icon right over here. It's a Tradingview icon. If you click on that, it's going to bring you over to Tradingview. Now, for me, I already have a Tradingview account. And so what I'm going to do over here is I'm just going to clear these indicators. I know we covered indicators, but I do want to make several things, pretty clear. So let me, I'm going to go over here to USD JPY. Let's go over here to USD JPY, FXCM. Okay, cool. I already done my markups right over here. Let's go over to the weekly chart. Okay, so I know I covered charting in the in yesterday's lesson for the most part. Okay, so I wanna keep things really quick and smooth in regards to this because we only went over basic charting. We didn't go over indicators, and as you know, in the last video there was no audio, so I'm gonna make this really quick. Okay, cool. So right over here, you see I already drew my support and I already drew my resistance line. So just so I can break this down to you as to what exactly these things are, let me break it down for you. Okay, I am going to do some annotations over here. All right, so basically a resistance line, all right, look at it like a ceiling, okay? Actually, let me erase this. Let me make this a little thinner. Okay, so this is a resistance line. Okay, this is a resistance. Okay, so basically, think of it as like a ceiling. All right. When the market hits it, most likely is going to be dropping down. So therefore, you want to look for sells, right? And the idea of trading is you want to buy low and sell high. So in this example, it is a resistance area. We'll be looking to sell right in this area if it's going to respect it. Now, we're going to go over breakouts and retests in another time. But for right now, just to keep it simple, all right, a resistance area is when the market hits this area and it tends to drop more than does anything else. So you see, here's a touch to the resistance area. Here's a wick, right over here. Now, a bearish candle is a red candle, as you see over here. When we're looking at bearish candles, that means that price is going down on those bearish candles, okay? You have a wick in the top, wick in the bottom. Sometimes you have no wicks at the top, no wicks in the bottom, but what exactly is it that you're seeing? Well, you're seeing the high, all right, at the top of the wick, all right, top of the rectangle on a bearish candle, which means price is moving down. That's the open price. Okay, that's open. Excuse my writing. The bottom part over here, the bottom of the vertical rectangle, all right, is the close price. Okay, and the tip of the wick in the bottom over here is the low. Okay, so whenever we're looking at the markets, is giving us 4 data points. The candles are giving us 4 data points. Now we are looking at a weekly chart. So this represents what price has done. Each candle represents what price has done in weekly intervals because we are on a weekly chart. If this was a 5-minute chart, each candle represents what price has done in 5-minute intervals, okay? So again, red candles are candles where price is moving down, all right? Whereas these white candles, otherwise, you see them as green, you see them as, you may see them as blue, depending on who you're learning from, but these white candles is basically price moving up, all right? All right, price is moving up. Wow, that was trash. Hold on one second. There we go. Let me do that one again. All right, so price is moving up on these white candles. Okay, and basically you're going to see is going to be the same data point. So the bottom wick over here, okay, is the low. The contrast is terrible. Hold on. Okay, so when we're looking at a bullish candle, okay, bullish means that price is going up, okay, wick in the top, wick in the bottom, okay. The 4 data points is this. In a bullish candle where price is moving up, the open price is at the bottom of the rectangle, close price is at the top of the rectangle, all right. Tip of the wick in the top is the high. All right, tip of the bottom is the low. So we're getting these 4 different data points, in each candle that we are looking at. And according to whatever time frame we are looking at, all right, this is letting us know what price is done in those time frame intervals. So every candle over here represents what price is done in a matter of a week, okay? Now, I drew my support line right over here. All right, so look, check this out, support line. What is this, bro? Come on, man. I don't know. What is that? Okay. So right over here, support. All right, this is support line, and this is also known as a floor, depending on who you're learning from. And basically, whenever the market is touching this area, all right, whether it's wicking there or opening, closing there, all right, it's a prominent area because it's showing that this is an important level. There's market reactions to this level. And most of the reactions are price is jumping at that level. So when you see that most of the time price is jumping at that level, that's a support. If you see in the top where the market is basically dropping most of the times when it gets there, then it's a resistance. There's going to be some times where, like in a resistance line, where the market goes a little on top and then somehow it just kind of corrects itself and then it just stays, moving in that regard. Same thing. Sometimes in a support level, the market will kind of go a little under it and then retest it and then respect it again. So you're going to see that. All right, time and time again, you're going to be able to see these kinds of things. So for the most part, ladies and gentlemen, remember this. This is a bullish candle, all right, and a bearish candle. So this is the way how a bullish candle goes. Bullish, okay, price is going up, all right. Bearish, all right, price is going down. Okay, so this is basically the way it works when it comes to support, resistance, the anatomy of a candle. And now let's talk about trend lines. Now, whenever we're doing an uptrend line, think of it as a support that's moving up. A lot of the times, to indicate a trend, usually the angle is about 45 degrees. Sometimes it's even more sharper than that, right? But for the most part, we see it's like a moving support slanting up. And so when you're doing an uptrend line, okay, you're essentially connecting the higher lows together, okay? And you see just like a support moving up, all right, you start to see some similarities of a support line. In the downtrend, you're going to see similarities of resistance line, because that's basically what it is. So you're going to be seeing these points where the market is touching and it's reacting, right, this level, all right? And so you're going to see the same thing over again, all right? You're going to see the market trend up, hit a resistance, trend down, right? Hit a support, trend up, and it's going to be consistently moving like that forever. That's just what it is. That's just the way it's going to go. And so what you're seeing here is SRT, support, resistance, trend lines. This is your go-to when it comes to charting 101. Okay, so look, charting 101. All right, terrible one, but basically it's SRTs, SRTs. Okay. Wow, sorry, y'all. Support, resistance, trend lines. All right, support, resistance, and trend lines, ladies and gentlemen. All right, so here you go. Here you have it, kind of a quick crash course on what we went over yesterday. Okay, now when you look at a currency pair like USD/JPY, all right, you see that this is a currency pair. So you have the base, you have the quote currency, right? And basically you're pitting one currency against another. That's literally what you're doing. So when you're buying USD/JPY, you're buying the US dollar against the yen, but when you sell USD/JPY, you're buying JPY against the dollar. So that's basically what you're doing. Now over here to the right hand side, you have all these exchange rate prices, right? So right over here, 149.995. This is an exchange rate price where the resistance area is basically in, right? Now what you're seeing is this. Whenever you're looking at these prices to the right hand side, the exchange rate prices, it is done in a quote currency. Okay, so when you see that, what it's telling us is that it is 149.995 yen, Japanese yen, per one US dollar. So when you're looking at a quote currency and you're looking at the exchange rate prices, you're looking at how much of the quote currency equals 1 unit of the base currency. So that is basically what you're looking at when we're looking at these currency pairs. This is what you're looking at when you're looking at the anatomy of a candlestick. This is what you're looking at, charting 101, SRT, support, resistance, trend lines. There's certain characteristics that you're going to be able to see. There's certain patterns that's going to show in the market. These patterns are because we as humans are habitual creatures. When these patterns show in the market, we know most likely what may happen next, but it's never guaranteed. Why? Because trading always involves risk. Okay, so this is extremely important for everyone to fully understand before we move forward with anything. Now, over here to the left-hand side, these are all the drawing tools. So if we're looking at the drawing tools, okay, when we're looking at the drawing tools, we can see if we click over here to the right, we're going to see all these different types of lines. All right. So you're going to want to use, horizontal rays as opposed to horizontal lines fully. So that way the market can start, the lines can actually start where you want it to start. Right. So it's very critical, very key that you use some of these tools, and they're pretty powerful. So for example, if I go to trend line, this is where I can go and I could just draw a trend line. I can make it whatever color I want. Okay. I can make it whatever color I want and we'll be good to go on that, right? Okay. Let me erase this. Okay. So if I wanted to use any other kind of line, if I want to use an info line, right, and I'm looking that, hey, look, from this support over to this resistance, all right, I'm looking at this as like, okay, well, this 2,288 pips. 2,288 pips on a $1 standard lot. That's $22,000 made. On a $10 standard lot, that could be $220,000 made. So, there's different individuals playing at different levels. And when you're just starting off in Forex, okay, everyone's going to start with a couple of $100. $500 starting is a good reference point to start at because, the $500 to $5,000 challenge, it's a great beginning for everyone that's just learning something new. So what I'm going to do is I'm going to take a snapshot over here, or a screenshot, tomato, and I'm gonna put this in the group so you can see. Now remember, all right, to set yourself up for traditional Forex, in order for you to actually start trading, all right, just remember, so Forex registration, part of my writing, guys. All right, just go on over to Sway Markets. Go on over to swaysetup.com. All right, for binary registration. All right, you can go to binarysetup.com. All right, you could go over to binarysetup.com for binary registration, okay? And so this is going to be a good reference point for you to have. Let me actually screenshot this one, and I'll send this one in the Instagram group as well. All right, and so there you have it. There you go. Very simple. This is what we covered. Today, we are also going to be covering indicators, okay? So hopefully you got that. All right, let me erase this. Let me erase everything on the board over here. Okay, and when we're talking about indicators, what indicators offer are additional confirmations as to where the market may be going next. So of course, I cannot talk about indicators without talking about the Bollinger Bands, right? So indicators are extremely powerful. So we go over here to technicals, we go to Bollinger Bands. John Bollinger created the Bollinger Bands, and basically he made it in a way where 90% of the time the market is in between the top and the bottom Bollinger Band. So whenever it's actually outside of the Bollinger Band, that is a high indication for a potential reversal. So look, while this is going up, look, if this stopped right here at this resistance level, high indication of a potential reversal. It ended up being true. Now, same thing over here, okay? The market was outside of the bands just a little bit, okay? And it just so happens to be right at a strong support level, right? And the market started going up, okay? So you're going to see the market go up. You're going to see the market go down, okay? The idea, the name of the game is to buy when the market is low, sell when the market is high. I want you to think of the charts as you're looking at real estate, but it ain't the housing market. You're looking at real estate in terms of countries' currencies, okay? And I do want you to look at countries' currencies as company stocks, right? The value of their shares, it matters. Same way how when it comes to a country, the value of their currency, it matters, right? We're in the business of this. Now in 1971, Richard Nixon took us off the US dollar. And so when that happened, the exchanges were no longer fixed, because before, if you wanted to exchange the dollar for the yen, it was done in a fixed exchange rate. If one country's currency wanted to exchange with another country's currency, let's take USD out of the equation, it was still done at a fixed exchange rate, because the dollar, all right, was basically the world's reserve currency, assuming that it was backed by the gold standard. So once other countries started requesting their gold back, that's when things got a little interesting, and we started to print more money, all right, than we started to print a lot of money, and it was really going off of the gold standard. So Richard Nixon took us off of the gold standard. When that happened, all currencies around the globe became floating exchanges, where geopolitical events will move the value of the currency, whether the currency appreciates in value or decreases in value, whatever the case may be. It's a free floating exchange at this point, and so it made it possible for actual day traders to come in and be able to trade. In the beginning, when I first started trading, one of the biggest stories I heard was George Soros and how he broke the Bank of England, winning $1 billion trade. He basically borrowed like over $10 billion using his resources, and he betted it all against the British pound and made $1 billion in profit. All right, that was insane. There's really big players behind the scenes on this, and it doesn't matter, what you're into in politics or whatever the case may be. We're talking solely as traders and solely information based, on the financial, in the financial world, okay, in financial technology terminology. So yeah, Bollinger Bands are really powerful. So when the market is touching the top band, all right, and it's already outside of it, it's going to be strong indications for sell. Right over here, strong indications for buy. You can adjust the indicators to make it fit your style, right? I like coloring them. Okay, so the upper band I like to make red, lower band I like to make white, because I kind of like the red white candle settings. Okay, and so basically subconsciously, if I see red, I'm thinking sell. If I see white, I'm thinking buy. But even when my charts are green red or blue red, my Bollinger Bands are going to go with the theme that I'm using. Sometimes I like to switch the color themes on my chart. But you can see how this actually plays out. Now, you could throw additional indicators, because again, indicators are just another confirmation. So one of the other indicators that I like to throw in there is the stochastic oscillator. So the stochastic, all right, it's going to show us when the market is overbought, oversold. Listen, supply and demand, right? So when the market is all the way down, it's only a matter of time before it goes up. When the market is all the way high, it's only a matter of time before it goes down. So this is what it's showing us. So right over here, whenever we see the market crossing down this top dotted line, that's a trigger for a sell. Whenever we see the market crossing up this bottom dotted line, that's a trigger for a potential buy. You can literally see it right here. So when I zoom this in, all right, and I use a vertical line so you can kind of see the alignment, right? Check this out, right? So we see it over here, all right, and we also see it over here. Look, right over here, okay? And for sell, right over here. So we already get kind of the confirmations ahead of time, but when we get these additional confirmations, it just makes sense. So if you get 3 or more confirmations, even better. You could throw some more scalping based indicators on it. So you have the stochastic, all right. We also have the RSI, which is the relative strength index. So we get up in here and we click on the relative strength index, all right, boom, all right. Now we have another potential indicator confirming the direction. So right over here we did get the confirmation for a sell. Over here we did not get a confirmation for a buy, but right over here, very strong confirmation for a sell. That's 1 confirmation off the SRTs, 2 confirmations because of the Bollinger Bands, 3 confirmations because of the stochastic, 4 confirmations because of RSI. I already have 4 confirmations. Another thing that I like to do is I like to throw in the exponential moving average. So if we go to EMA, all right, so moving average exponential, okay, I like to click on that and we're going to make it 200. So basically what it's doing, it's reading the data from the last 200 candles, all right, to determine what it may do next. So right over here, this can act as a trend line in a way, right? But when we're looking at this, then we kind of know what the deal is. So the market is moving up, as we can see. So it's like, okay, cool. We don't really consider this. So while everything is saying sell, 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 4 confirmation for a sell, there's only 1 confirmation for a buy. You want to go with the majority rules, right? Now, on the buy, if you see that the market is already bullish, you see this kind of position the way it's at, Bollinger Band confirmation, SRT confirmation, EMA confirmation, stochastic confirmation. That's already 4 confirmations for a buy. The only one that didn't was the RSI. So that's only 1 confirmation, where it's like there was no confirmation at all. So 4 out of 5 confirmation. So each indicator is going to provide a confirmation. SRTs is a confirmation within itself, and basically you go based on that. Now, what we just done was we created a strategy template. Okay, we created a strategy template, so we can actually save this by going over to indicator templates, okay, and click on save indicator template, and you give it whatever name you want. And so once you look at the different templates that you created, all right, and you click on any one of them, you're going to be able to see that there's so many different other things that you can do, okay, and it's all pretty powerful. So I created quite a few things that I think people would be surprised to know that I created, but eventually it's going to get to, super advanced levels. And I do have additional indicators that I would like to give you as gifts, but you need a Tradingview membership. So, go over here to the free charts. All right, click on the Tradingview icon. You'll be able to get it. I'll also drop the link in the Instagram group as well. But you're going to be able to see that, hey, look, there's a lot that goes into this, and you should definitely be aware of that. Now, what we covered was all scalping strategies, right? So let me just remove all the indicators. I'm going to keep the markups here, right? And so you're going to also be able to see, trending based strategies. So for example, if we go with the Williams alligator, okay, boom, we go with the alligator strategy. Basically, whenever the green line crosses down the other two, it's a trigger for a sell. If you see the green line going up, the other 2 lines, that's a trigger for a buy. So you're going to be able to see, this more in bigger settings, and this could mean thousands of pips. Remember, pips is percentage in point. All right, price interest points. All right, this is it's a unit of measure from one exchange rate to the next, right? And you can see there's some big moves being made in the market. And from an aspect of speaking right now, this is USD, JPY. We're actually in a strong high right now. The last time the market was this high, we could go back in time, look at this, was the last time the market was this high, it was in 1990, in the 1990s, 1980s, look at this. It hit this level in 1989, and then it hit this level again. It hit this level again in 1987. Okay, so look, multiple touches to this level. This is a very important level where USD JPY is right now, and it matters, especially someone like me, because I trade mostly USD JPY. Now, 2 things can happen. Either one, it respects the resistance, and there's an opportunity for a great big sell, the long short, right? Or it's going to break that level, retest it from the opposite side, and continue to go up. So so that's basically that. Now, as a gift, because we are covering indicators, I'm going to be sending some ebooks on indicators, starting with the Bollinger Bands ebook. So be on the lookout for that. In a couple of days' time, I'll be able to actually give you customized indicators for those of you that have Tradingview. It's free to have Tradingview. I'll give you an invite-only script, and you could, put some pretty powerful indicators on your chart. But for right now, hopefully this covers the basics. There's so many indicators that we could cover. There's really a lot of really cool indicators that we could cover, but that'll be simple for now. On our live sessions, you're going to be able to see more of what we're doing, more of what's going on, and Please rewatch, review this. And if you got any questions, make sure you hit me up, because again, we want to make sure you jump to the next level, right? When you're trading, we don't want the time expirations of a trade to start giving you anxiety, where your heart is beating, all that stuff. We don't want to surprise you in a way where you're like, hey, what is this guy doing in the charts? Like, I didn't expect this.
What the hell?
You're over here singing a song. What's going on? Right? And we don't want individuals to, not practice safe risk management. Okay? Trading involves risk. So when we are trading and you decide you want to take a trade, don't put your whole entire account on a single trade. You don't want to do that. You want to be disciplined, because if not, you're going to be feeling bad.
Emotional damage.
All right. Instead, we want you to look at your profits like, what is that? What is those extra digits? That's kind of what I want for you. So just keep in mind, there's no such thing as a stupid question. So you don't gotta get worried. You're not gonna get judged. Just ask me whatever you would like to ask me. And for the most part, ladies and gentlemen, I hope that you found this. I hope that you found this valuable. We're gonna get on these live sessions. You're gonna see me go for a buy. Okay, you're gonna see me go for a sell. All right, you're gonna see me do all that good stuff. All right, but for the most part, we do want to make sure. That we're doing our thing, you know what I mean? And so with that said, stay blessed, take care, and I'll see you on the next lesson. Peace.